Hi, this is Simon from Strategise Financial Modelling. Today I'm going to look into the power of applying sensitivity analysis during strategic planning and how it can benefit your financial modelling. As I mentioned in the article, sensitivity analysis can be undertaken on a more corporate, high-level perspective, or it can be undertaken on a more micro product or service specific area. This following current sensitivity analysis I'm showing you is more on a corporate, high-level corporate perspective. So as you can see, currently we're achieving almost $5 million in earnings based on 5 to 2% revenue growth in 2014. What I want to understand is that if I increase this revenue growth, say from 2% up to, say, 8%, because suddenly we've got a new product or we're expanding our company's product offering into a new market, how that impacts. And as you can see, we've gone from about 4.9 million to only 5.2 million, from essentially quadrupling our revenue growth. Now let's say we're going to be now sourcing raw materials in a more expensive location in order to satisfy our expansion into this new market. Let's say our COGS are going to increase from 20% up to about 24%. Let's see how that's going to impact. As you can see, it has a drastic impact on our earnings. But on the flip side, our operating expenses are going to actually decrease because we're going to be moving a lot of our labour costs to a lower labour market. So let's assume our operating expenses are going to drop from 19% down to, say, 15%. So as you can see, the increase in cost of goods sold has essentially been offset by sourcing labour or achieving lower operating expenses in this new market. Now let's move on to a more micro product or service specific area of your company. Under this sensitivity analysis, we're looking at a company that's providing training courses. Now let's say that we're going to be able to increase the fees charged to our non-subsidised students by $2,000. As you can see down here, our earnings have greatly improved by almost $40,000, over $40,000. Now, however, we must safely assume that if we increase our fees, then we're going to lose some of our students. So I'm going to assume now that the $2,000 increase that we're charging is going to result in us losing 20% of our students. So as you can see, even though we've increased our fees by $2,000 and assuming a 20% drop in students, we're only incrementally just ahead. Now, to further understand how sensitivity analysis can work in your company, let's go and look at another area that I know is impacting our earnings. So let's go down to employee costs, or more trainer costs. Let's see if we were to reduce that cost, say by 50%, we can see we're only having a small incremental impact on overall earnings. So that's the real power of sensitivity analysis. It not only enables you to identify your key drivers, but it can also help with strategic decision making. So there we have it. This is a real area of immense value to the strategic professional. It can really add further value to their client or corporation, by the mere addition of sensitivity analysis, they can really help to provide additional insight into how companies can improve their bottom line. For further questions, please don't hesitate to go to my website, strategisefm.com, and send me an email. Thank you.